Numerix video blog, your expert source for derivative trends and topics. I'm your host, Jim Jockel. Greece continues to dominate the headlines with a 61% no vote on Sunday's referendum as it relates to the proposed bailout. More importantly, Euro USD is down as we're continuing to see shocks throughout the market with pressures within the U.S. stock market as well as in Europe. Joining me today to discuss this is our resident FX trader, Udi Sela. Udi, how are you, sir?
Excellent. Good morning, Jim.
So let's talk about near-term concerns. Clearly, there's a lot of unrest going on into the week. What are the things that the FX market should be most concerned about?
Yes, actually, we can discuss a couple of markets here. So the biggest concern in terms of FX is, of course, the euro break. And, of course, the fear is if it starts with Greece, what will happen to other currencies and the peripheral countries like Portugal, Italy, or Spain. And indeed, we've seen today when looking at the fixed income markets that there was some pressure on the peripheral bonds, such as the big countries, if you like. And while people were buying a little bit more of US debt and German debt, and to a certain extent French debt. And of course, the weakness in equity markets, and couple that with China, where we're seeing a meltdown. So there's some fear now, a risk-off, if you like, environment in the market.
I caught on LinkedIn today from Morgan Stanley, and they were suggesting that on the whole, contagion might not be such an issue, noting that the European economy is in a much better fundamental footing. The banks have had time to think about this in terms of potential insolvency and how that will go through other institutions, as well as other tools that have been put in place throughout the EU as a quantitative easing, etc. What is your kind of reaction to that?
Okay, so the way I tend to agree totally with that, and I'll explain why. So if you look at the first round of the subprime crisis, it was households being over-leveraged. And what happened was that banks assumed the debt, and eventually banks were over-debt. And then the third step was basically the government taking the loans from the commercial banks. And indeed, this is what we're seeing in Europe, where most of the government, at least the Greek governmental bonds, are being held by the ECB or the governments themselves. So therefore, even if there's a complete meltdown, it will not be taken on the banks level, but rather on the government level. And that's why I think if you like, even if you look at the reaction today, it hasn't been that bad, because everyone had time to prepare. So it's almost, if you got hit today, you deserve it because you didn't prepare your portfolios properly.
It seems to be more on your mind right now is China. So why don't you give us a little insight to what you're thinking?
If you look at the main Chinese indices over the last 18 months or so, the markets more than have doubled. And what we've seen was a huge leverage mostly from individuals around China, basically taking credit and buying stocks. And at some point, the daily jumps were like 2, 3, 4, 5%. And obviously this had to, just like any market, this bubble had to burst. And indeed, over the, I think 3 weeks or so, since sometime in I think the 10th of June or something like that, the air is out of the bubble. And if the market was above, the index was above, the Shanghai index was above 5,000 points. Today it's, I think, 3,800. And the Chinese government, has announced that, first of all, no new IPOs, and that something like 27 investment houses will invest, I can't remember exactly, I think the amount of 120 billion Chinese yuan to support the market. So obviously there's a lot of concern given that, the GDP in China is not growing at the same pace as previous years. And consumer confidence is low and so forth. So this is a big risk for China, hence, the governmental support.
So one last question, Udi, just thinking ahead of the next couple of days, obviously it's still a volatile situation. What's keeping you up at night? What are you thinking about in terms of what's on your watch list?
No, these are two separate questions. In terms of what is, I think, most concerning, will the European idea collapse? As we know, the biggest problem was always that there was not, with the monetary union, there was no fiscal union. So does it mean that the nice ideal, you can argue about that, of having a United States of Europe will collapse because of Greece? Is it just like, could it be contained, or is it going to touch other countries, and then it could have also severe political impact in terms of extreme nationalist parties and so on. So that's, I think, the biggest concern. In terms of currencies, see if the euro sustains, the yields break, and so forth.
Well, Udi, thank you so much for joining us. And as this continues to unfold, we're definitely going to want to have you back and get some more of your thoughts. And of course, we want to understand all the thoughts that you're thinking about and what's keeping you up tonight as well. Please follow along on Twitter at NXAnalytics or on LinkedIn for the latest posts and information updates from Numerix. I'm your host, Jim Jockel.